So the Reserve Bank today left the official cash rate unchanged at 1.75%. Global economic growth has increased and become more broad-based over recent months. However, major challenges remain with ongoing surplus capacity and extensive political uncertainty. The level of core inflation has generally remained low. The 5% fall in New Zealand's trade-weighted exchange rate since February is encouraging. If sustained, it will help to balance the growth outlook towards the tradable sector. The growth outlook remains positive, supported by accommodative monetary policy, strong population growth, and high levels of household spending and construction activity. House price inflation has moderated further, especially in Auckland. This partly reflects loan-to-value ratio restrictions and tighter lending conditions. The increase in headline inflation in the March quarter was mainly due to higher petrol and food prices. Non-tradables and wage inflation remain moderate, but are expected to increase gradually. This will bring future headline inflation to the midpoint of the target band over the medium term. Longer-term inflation expectations remained well anchored and around 2%. Developments since the February monetary policy statement on balance are considered to be neutral for the stance of monetary policy. Monetary policy will remain accommodative for a considerable period. Numerous uncertainties remain, and policy may need to adjust accordingly. Yeah, we're neutral on monetary policy, and for the foreseeable future, we would expect the OCR to remain at its current level. Now, bear in mind that the forecasts that we put out are always highly conditional forecasts, and forecasting's always challenging. Inevitably, our forecasts, like everybody else's, turn out to be incorrect in some way. So these are based on assumptions about growth in the rest of the world, what's going to happen to the exchange rate, commodity prices, migration flows, house price inflation. There's a whole lot of assumptions and judgments built into these. But if the economy develops as the way that we anticipate in these forecasts, or the central set of propositions in this forecast, then we wouldn't see the need to change the OCR in the foreseeable future. Now, if those forecasts turn out to be wrong and they change and the underlying assumptions are incorrect, or there are unexpected developments, then we'll clearly just look at the new information and make a judgment. But it's always difficult, Rob, to forecast house price inflation, as you know, given the supply and demand imbalance that's out there and the very strong migration flows, and also the low interest rates. But we have been encouraged by what we've seen in the last 8 months. I mean, if you take national house price inflation over that 8 months, it's increased by around 1.5%. If you took the 8 months prior to that, house price inflation was running at around 13%. Now, if you look at Auckland, over the last 8 months, house price inflation has actually fallen by about 1.5%. The 8 months before that, it had increased by about 14%. Now, we don't know whether the house price inflation, that the moderation that we've been seeing is going to continue. We think there may be some increase in house price inflation, but nothing like what we've seen in the past.